maybe just a little bit as it relates to this video. But this is really more of a high time frame, big picture, information video. And that means that whatever I tell you, boy, that's loud enough. Whatever I tell you in this video is not to be used for low time frame trading. This is big picture, high time frame stuff. Okay? This is the macro view or a macro view of what is happening with Bitcoin and what is likely to continue happening with Bitcoin from here into the foreseeable future of the next several years. Right now, Bitcoin, the last I looked at it anyway, is above 70K, right? Well, I think it was even above 71K, or around there. What does that tell you about what is happening? If you look at, zoom out, and take a look at the big picture, okay? You got the pernicious perma-bears like Peter Schiff constantly saying Bitcoin is going to zero, right? He's shilling gold still now, right? Gold's at like whatever it is, $2,700, and he's all, people are ignoring the fact that gold is at $2,760 or whatever, but they're ignoring it because everybody just cares about Bitcoin being at 74K, right? What he doesn't say, and surely he knows because his son holds big bags of Bitcoin, and surely he does too, or there's a very high probability that he does. What he's not saying is since 2009, gold has returned a gain of about 213%. Bitcoin, since 2009, has returned gains of about 11.2 billion %. That's not a mistake. That's real numbers. 11.2 billion %. With a B, just like Bitcoin, right? What does that tell you? Well, it tells you that the returns on Bitcoin in the same last 15 years have been significantly and staggeringly higher than a commodity like gold for many, many good reasons. First of all, the volatility, entropy, probability, and statistics. And second of all, you can get into all the characteristics and traits of the assets. Gold's not as easily divisible. Hard to walk around with a bar of gold and pay for things, even in little gold coins or gold dust. But you can pay for things with Satoshis quite easily as long as the recipient accepts them, right? Gold isn't uncensorable. Gold isn't very portable. Try crossing a border with $1 million worth of gold. Good luck. Try crossing a border with $1 million worth of Bitcoin. You'll find that it's actually quite easy because you can literally cross that border with the Bitcoin in your head if you remember your seed phrase, right? Or you can just have a hardware wallet, which is quite small and can be easily, can go unnoticed, and you got it with you, or even a software wallet. Right? It's quite secure and doesn't require armed guards necessarily, unless you've got many billions worth of it and you have your wallets in a vault that's guarded 24/7. But even then, at that point, you should have more than one wallet, right? And it should be not all in the same place, and they're tiny. And the point is, it is much easier to secure your Bitcoin and take it and use it to send messages that are uncensorable, right? Send transactions to people that are uncensorable, no middleman, just you and the recipient, or maybe you're the recipient and the sender sending it to you. So it has all those wonderful qualities that gold does not have. Right? There's also a very finite amount of Bitcoin that we know the max supply. However, when it comes to those shiny yellow rocks, there is no known max supply. Yes, there obviously is a max supply in terms of what's here on Earth at the moment, but that doesn't mean we know what that max supply is. And every year, gold diggers, gold mining companies keep digging up more gold. And geologists are very good at finding where the next veins are that are worth mining. So they keep coming up with more supply, right? And they have not run out of supply in 140 years or 160 years, which is roughly the total time, 155 years, which is roughly the total time it will take for Bitcoin to go from 0 to 21 million coins, right? So there's about 140 years left, 124 years left, whatever. Roughly 140 years to 150 years, there won't be any Bitcoin left to mine, in theory, right? As long as the computers keep mining at the rate that they're mining at, given the halvings and everything else. So there is a very finite max supply of Bitcoin, and it's already owned predominantly by whales. And when I say whales, I include all of the big different kinds of things. Individuals who have massive amounts, governments who have massive amounts, banks who have massive amounts, financial institutions who have massive amounts, central banks who have massive amounts, any kind of large wallet holder that has hundreds or thousands of Bitcoin. Huh. And so the people who have, or the organizations or the governments who have these large amounts, they already have most of it. Gold is actually more distributed among regular people than Bitcoin will ever be. Does that mean that gold will be ultimately more valuable than Bitcoin? Not for the foreseeable future, unless there's some kind of massive solar flare that destroys everything on Earth that's electronic, and we all revert to the Stone Age system, or the pre-electronic, pre-industrial age system of communications, and we can't rebuild computers anymore for some reason, and people decide that using Bitcoin with paper and pencil is too complicated, even though it is in fact possible. You can even watch videos about it on YouTube, about how to mine Bitcoin manually, or how to transact Bitcoin manually using paper and pencil. It is entirely possible. Now, is it more complicated? Yeah. Is it less convenient? You bet. Is there a high probability that fewer people would use it if we had to revert to that? Yeah, absolutely. But then again, they would also not use other forms of electronic payments if there were no electricity available. And Bitcoin would then suddenly be, and so would Litecoin and other coins that are forked directly from Bitcoin, would suddenly actually be a very viable option, especially if solutions to using it quicker would be enabled, even without electricity. Okay? And there are ways to do that. So what does that tell you? It tells you, if you zoom out and you look at the macro, okay, yes, if you look at the log returns, of course, the gains, the returns made in the first year, second year, the first time that it really leaped up from 0 to whatever it was, $10, $40, those returns were insane. Because anytime you go from 0 to some number, it's going to be crazy returns. But the gains it has made since then are also insane. And you can say, well, there's diminishing returns. Yeah, there are. And at some point in the future, right, it will stopped being such a massive upside risk investment. But that time is still very far away, thanks to the fact that it is very volatile and it is very scarce and there is a huge demand for it and it is already owned by really rich people who don't need to sell. The only time the rich sell their Bitcoin is when they want to dump the price in order to buy more cheaper. That's when the people who have, when I say the rich, I mean the Bitcoin whales. The only time they ever dump is when they want to just pick up some more at a lower price. So they take their profit when it's high, based on the volatility or whatever, if they're smart traders. And then when it reaches some low or some lower price than they sold it at, they just buy more. And they know that retail people aren't going to buy more because retail people are the easiest people to scare. Oh, the price is dumping. I don't know what I'm going to do. I'm going to stay out of it. The smart retail traders, and what they call diamond hands also, although they're a bit degenerate, but that's a different story, and God bless them. Anybody but the diamond hands and the true degens of holding Bitcoin that are in the retail space are super easy to scare. When they see the price going down, they dump. And they usually sell too late when it's already at the low. And then when they should be buying back, they don't. Right? And the reason is because the people who sold the big amounts to dump all over the retail basically fudded, used FUD to scare those retailers away and to make room for themselves at the bottom so they can pick up the loose coins that they sold at the top. Right? Literally, whale walks into a bar, dumps 1,000 Bitcoin on a table, everybody runs for their life, runs for the door, sells their Bitcoin on the way out because they're afraid the price of Bitcoin is about to crash just because some whale dumped a whole big bunch. And then the price is lower because everybody sold after the whale sold. And then the whale just literally waits for the room to clear out, or for the exchange in the real world analogy. And as soon as it's at a clear enough space where they see the dump has happened, they just buy it right back for a lot less than they sold it for. So they make profit at the top, and they make profit by buying cheaper when it hits the bottom, because they're buying for less than they sold. So they keep that difference on their profit. Right? They didn't just dump their amount, take that whole profit and keep it and walk away. No, they dumped it, and then they used whatever portion of the money that they got from the sale to buy it back, and keeping the difference as profit. That's the whole idea of buying low, selling high, buying low, selling high, buying low, selling high. All right, so when they originally get in, they're buying as low as they can. And then when they sell, they're selling as high as they can, given their risk profile, their risk appetite. That's how that works. Don't take my word for it. That is literally how the rich get richer and retail gets poorer every single time. Every day, every moment that markets are trading. That's just how it works. And if you're not one of the rich, if you're not a whale, guess what? The entire system is rigged against you. You don't operate in a free market society. You operate in a society that, even though crypto is deregulated, it is not a free market. There are rules that govern centralized exchanges, even in a deregulated market. For example, if you're a massive whale and you missed an entry or an exit, believe me, there are things that exchanges can do, and they do, to mess with retail traders. Right? You'll ever notice what those massive, insane wicks are? And how you might hear about one or two people who made a huge amount of money buying when the price dumps to like $1 on Binance or whatever? Ever wonder why you don't hear about those stories after the initial headline? And the exchange saying, we're looking into it, we're going to take care of it, everybody's funds are safe. Yeah, all they did, in most cases, I'm not singling out Binance here, but just as an example of an exchange where you've seen insane wicks to the downside, all they did, right, was enable the whales to not miss the trades that they actually wanted. That's all they did. Why? Well, because they make a lot of money from whales by custodial services, or by selling them order flow information, or by letting them, be in on various VIP services that you don't get as a retail trader. Even if you got a couple million, you're not a whale to them. I mean, you might be a whale to you and your friends. And most people don't have a couple million. They're lucky if they have 100 grand. So that is how whales will take your Bitcoin. And they keep doing it. They've been doing it forever. That's how they've amassed 91% of all the Bitcoin that there can ever be. It's not by accident. It's not a coincidence that they've outsmarted the retail traders. That's how it works in every market. It's just that in Bitcoin, it's more extreme. Which is why, if you're not a trader, don't try trading, especially if you don't know how. If you're going to trade, learn how. Right? How do you do that? Go to Alpha Trading. Check out alphatradinghq.com/Discord. Again, alphatradinghq.com/Discord. It's totally free to learn. You get free tools, right? A free pre-populated chart that you can use on TradingView. Free access to a chat with people who trade the VEPs every day. Free information about the macro picture and the low time frame picture, and you don't trade low time frames based on macro information, because that'll just get you wrecked. You trade the low time frames based on the relevant information to your trades. Yes, there might be high time frame information that is helpful to know the big picture, but if you're trading intraday, then you need to have intraday information, and that information has to be leading information. So check it out. See you later. Happy trading.